Good afternoon, everybody. Happy Roaring Kitty Day. Oh, turn this off. Boom. And I'll put it into. I'm an associated member. You guys can hear me, right? Oh, there we go. I was scrolled up. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All of my trades are I can't speak. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I got out of Chewy and Palantir today. They both reached my targets. It's been a heck of a move there in Chewy from those recent lows to where we're at. I added some Unity calls. I did take off I don't know, I'm guessing like an eighth of those calls into the close because they moved okay in my favor during the day today from where I bought them. They expire next week. All right, let's go over to the videotape, as they say. So the market, where are we? We opened exactly flat, and we closed exactly flat. The Qs, I think, opened up like 0.1%, and they closed exactly flat. And finally, the IWM was relatively weak. I think it opened up down 0.5%. It stayed relatively weak. It closed down 0.75%. So once again, relative weakness from the Russell. At least today, that relative weakness makes a little bit more sense because the TLT is down, so interest rates are up. But the TLT did manage a pretty good intraday rally, well off of lows. So I mean, it's really not down so much that it should really have any impact on the IWM at all, to be honest. But it makes a little bit more sense to see relative weakness in the Russell when interest rates move higher, even if it's a very small move. From an index perspective, it was a very boring day. It was a consolidation day, which, by the way, consolidation days when you are a little bit extended are bullish. So S&P, looking at this 5-minute chart of the SPYs, very boring. Very little to talk about. Flat open, we traded higher, we traded lower, we traded higher, we traded lower, we got back to flat, we traded down, we closed flat. I mean, that's your trading session. S&P, very boring. NASDAQ, gapped up a little bit more, relatively strong pre-market, but also flatline type of day, very boring. The IWM, a little bit more action here. Gap down with the relative weakness. It did have a pretty nice snapback that got me a little bit excited at 940, 945. But then, like always, I was no longer excited. I got disappointed when I resumed its relative weakness. So, yeah. So, market itself, small time frame, nothing to talk about. Let's pop over to the big time frame, see if we have any updates. No real updates because it's consolidation day. But what today does for the S&P and the NASDAQ, as we've remarked, have very bullish daily charts at this point. They've totally broken out. They're at all-time highs. It's a rest day for the S&P. So I think we opened up, if I remember correctly, about $4.50 extended. So that $4.50 of extension isn't quite in the no man's land, so you can still look to buy. But the sideways price action, the boring price action today, will just enable that ADMA to catch up. So I think we opened up with $4.50 of extension. We closed with $4 of extension, but tomorrow will be less than that because the ADMA is able to catch up. The Qs were solidly in that no man's land this morning. The Qs were... It's so distracting to look at this meme that Josh posted of Shakira while I'm trying to look at these charts. But the Qs here were like $6.50 extended. $6.50 extended when the market opened. So that degree of extension is like into that no man's land where it's difficult to buy, it's difficult to sell, but overall is still pretty bullish. So the digestion day today potentially sets the Qs up for higher prices. And, the IWM continues to disappoint. The Russell opened up closer to the midpoint of its range, the range being basically between 202 and like 207.50. So there is no advantage in the IWM to being long versus being short. It's very neutral, but within the confines of the technicals of the Russell being neutral and being range bound, there is a lot of relative weakness on multiple time frames. So it was kind of one of those tricky situations this morning where you're analyzing a mixed message from the market. I've got cues that are bullish but too extended to buy. I've got the IWM, which is neutral. It's not extended at all, but it's very relatively weak. So, if the market decides to have a weaker day, the cues could be weak because, they're unable to continue, and you don't want to be long because of the extension, and the IWM is relatively weak, so you don't necessarily want to be buying that either. But also at the same time, you don't really want to be shorting because the S&P and the NASDAQ are very bullish and have the capacity to go from moderately extended to extremely extended. So kind of a tricky open this morning. I advised patience for the open and to wait to see if we get a signal that indicates continuation. And, we didn't really get that signal ever on a small time frame. So from a market perspective, there was nothing to do. From an individual stock perspective, there was certainly some excitement. With that said, I want to pause and see what Tate posted here. Tate posted the Roaring Kitty position update. Wow. These numbers are too big. I can't read them. So he made, today's gain was about $75 million on his equity and about $175 million on his options. Can we tell if he sold any? I can't tell looking at this if he sold any or not. But I also don't exactly know what the position was kind of coming into today. I'm seeing he's got 5 million shares of equity and 120,000 calls. It's pretty sick. Anyway, back to the meeting. As far as individual stocks go, there was certainly some excitement. There was some excitement in NVIDIA. Some of you guys were a little more aggressive on the short than I was willing to be, and you got paid for it. So congratulations on the people who were shorting NVIDIA this morning and were able to make some money. I really wanted like a parabolic move with an insane RSI, like a move, we likened this move today in the morning meeting to the move in the beginning of March, and we kind of tried to describe where the same degree of extension would be. And I think it would have been like if NVIDIA got to like 1300 today, it would have been a similar degree of extension as March when this thing got very, very extended. So I was looking for a move to 1300 plus to really consider the short. I didn't want to be too aggressive on it. I didn't want to jump in front of the freight train. But some of you guys were more aggressive, and you were able to make some money on it. So congratulations to the people that were short. And then we had a good long trade at lows, and it was kind of a tape reading trade. You saw that the heaviness of the sell-off that kind of came in. I really didn't think that the thing was 100% fully done and ready just to, and it's just my thought process, ready to correct to $1,100, even though it could happen. So you want to manage your risk. I started a little bit like, I don't remember, 1197 or so with a small position. I was able to sell some into like a quick pop, I think. And then it broke new lows. There was a heavy seller that I identified on the tape at 1188. And when it was below 1188 and I saw that seller come in on the offer, I said out loud when I was on the radio, I think that you could buy NVIDIA above 1188. You could put a buy stop above 1188. So I added more stock. I never got very heavy in it. I traded it very small, but I added more stock, on the way on, somewhere 1180 something, below 1190. I don't remember the exact price, and then when the seller broke that 1188, it gave a really good bounce back trade. I think I sold 80% of my position into this initial move, another 10% of my position into the move to 1220. The remaining 10% of the position, I was like, screw it, I'm gonna hold it for a move to 1300, but I got stopped out. I'm just seeing I got stopped out at lows. Wow, yeah, look at this red dot on my stop loss. Look at that red dot on my stop loss. Nasty. That was just my remaining 10% of the position. I was out of everything else by that point. So you know, NVIDIA actually turned out to be a really good two-way trade. A bunch of you guys made money short. A few of us made money long. So there was definitely some action in NVIDIA, and the price action just helps to satisfy some of the extension, and it hasn't really gone super parabolic. So I actually still think that there is room for this NVIDIA to continue to run higher if it wants to. And then outside of that, there was a lot of dispersion today, right? So the SPYs didn't do anything, but stocks are rocking and rolling. I think that with the sell-off in NVIDIA and, you know, AMD tried to be strong at a certain point, but the sell-off that kind of came in like Micron and some of these other semiconductor stocks, if you even want to call it a sell-off, it enabled some rotation into some other things. Some of these beat-up software stocks, I remarked in the morning meeting that, you know, a lot of people seem to think that AI is going to eliminate software and software companies entirely, which to me sounds a little bit crazy. But some of the trade that's been out there has been sell software to buy AI. In other words, sell software to buy NVIDIA. So it was interesting to see that when we got some relief on NVIDIA this morning, we actually had some decent rotation into some of these really beaten up, like growth stocks and software stocks. You know, Path, we had mentioned a long if it could get above $12. It was able to do that today with, you know, pretty good volume. We called it out in real time at 9:40 here on that actual break. It was a decent little move up to 12.40. I'm looking for a move to 13 in this thing. We'll see if we can get it or not. You know, Chewy continued today. $24 has been my target for quite some time. The high of the day today is 24.01 into the close, so I liquidated that position. 24 had also been my target for Palantir, so Palantir's high is 23.95, so I liquidated that one into the close as well. I will look to buy dips in both those stocks. So there were definitely names that were moving. This Unity actually finally gave an RDR today for the first time. I wish it was on bigger volume, but it looks like it finally has a date with the ADMA. A touch of the ADMA for the first time in like 16, 17 trading sessions is kind of mind-blowing, just the degree of the technical relative weakness. The price that the stock's trading at isn't mind-blowing. It's just the way that it's moved here from 23 to 17 and change without a single uptick or bounce until today is kind of mind-blowing. They sold this thing real heavy early and put in this doji. It was off that doji that I bought those calls, so down to like 1740 or so. I bought a bunch of $18 calls that expire next week, a week from tomorrow. So got a decent little move out of that. I sold a small piece of them into the close, like, I don't know, probably an eighth of them or something like that. I want to see if this bounce back can actually take me a little bit beyond the ADMA on the first real snapback here. I will probably sell more of those and more of my common stock at the ADMA, but I want to see if I can get a bounce back to more of the midpoint between the 8 and 21 EMA, which would be about $19 or so over the course of the next few trading sessions, and see if this you know, software growth kind of bounce back trade in some of these beaten up stocks continues. Talking about price action, where there was price action, because there was none obviously in the S&P. GameStop on fire today. GameStop gave an opportunity to buy yesterday. I was talking about it to a trader today. I didn't trade a share of GameStop today. You know, I don't like buying day twos as a rule. If the stock wants to go from 32 to 47 without me, it just is what it is. Because I'm not going to be chasing 32 when the stock was at 26 yesterday, and that was an opportunity to be able to buy stock with that doji off the ADMA on the daily chart. So I didn't trade a single share of it. I didn't trade any AMC either. $5 has been the trigger in AMC that we've been talking about for a while. It really kind of got through that 5 yesterday, but it retested it today. So AMC might have been more tradable. I tried to focus a little bit on this BYON once it took off, and honestly, this was the one that was disappointing. You know, I already have a position in it, so I was trading it. But into the pullback, I was looking at the GameStop pullback here, and I thought it was a buyable dip on the small time frame. I thought AMC was probably the same, so I didn't buy either of them. I bought BYON into this area. I took a pretty decent size ad, and had to liquidate that into the close for a small loss, unfortunately, because the idea was generally right. You know, GameStop pivoted up, made new highs. AMC pivoted up and, you know, got back near highs, but this BYON never gave any second leg at all. And if anything, it actually sold off a little bit and forced me to liquidate the stock I bought at like $14.90 for like a 15-17 cent loss, and it was on a bit of size, so that sucked. But is what it is. Overall, it was a fantastic trading day for me. I hope it was for you guys as well. And I think that kind of covers today's recap. So I am happy to answer any questions that any of you guys may have. When did his calls expire? They expire June 21st. Okay, interesting. Josh quoting S3 Partners managing director, who's saying that NVIDIA is the largest short in the U.S. market, adding that it's climbed to the top over Apple and Tesla. People are shorting it based on a momentum stock and also a hedge to the market and a hedge to the tech side of the street. I would still be very careful in that NVIDIA short at this point. I think that thing still has the capacity to blow higher. I really think so. If GameStop hits 69, Roaring Kitty will be a billionaire. Quote from Tate. That would be wild. Good for him. I'm rooting for him. I really am. I'm rooting for him. You know, I don't see anything. We've talked about this a little bit in the past. Happy to chat again just because it's interesting. I don't see anything illegal that this person is doing. And I see things all the time just as a market participant who, you know, watches stock all the time. I all the time look at things and I'm like, ooh, that was questionable. You know, like some of that large order option flow. Oh, wow, look, well, let's go back to... Here's just one recent example because it's one that I participated in because I just followed the flow, not because I knew anything. But on the 2nd, 3rd, and 6th, all of this large order option flow for Peloton, and then on the 7th, you get a headline that comes out that says private equity firms are circling around Peloton to potentially buy it. You just see stuff like that all the time that makes you go, well, that's interesting. I guess those people just got lucky, and then the headline came out 2 days after. You know, this Roaring Kitty person he's not advising other people to buy. He's not, to my knowledge, managing money for anyone else. He's just saying, hey, I made this cool meme of, you know, superhero stuff, and here's my position, by the way. I got a big position in GameStop. I think there's a lot of opportunity here. That's my personal thought. And no different than, you know, if I said on the YouTube broadcast right now that, hey, I think Apple's a really good company. I think the price could go higher. I don't see this person doing anything illegal. And, you know, all this chatter. I mean, look, there should be some degree of an investigation just to make sure that there is nothing nefarious going on behind the scenes, that he's not taking in, you know, money from outside sources that he's not properly disclosing or anything like that. Like I think that you can do that to truly make sure that there's nothing, you know, nefarious going on behind the scenes. But I'm not seeing anything illegal happening. And for like Morgan Stanley to come out and say, yeah, we're gonna shut down his trading and shut down his trading account, like there's plenty of other places that you guys could look at that there where there's nefarious potential trading activity that's going on. And just because this guy's got a lot of hype around him and is making people excited and interested about markets, I don't see anything wrong with that. And if anything, I think it's great. You know, there was a real lesson that a lot of people learned in 2021 when all these people who have never traded anything before in their life were just, you know, buying call options and making $100,000 and thinking that they were God's gift to markets. And then they got a reality call when the bubble burst. But I think that's a good thing overall because it makes people interested in the markets. And a lot of people, you know, when they gave back everything that they made, because they had never traded before and never knew anything about markets, they said, hey, you know, this is interesting. I actually want to learn how these markets actually work and learn to be able to do this right and learn to invest properly or learn to be able to trade properly. So I think that that's a great thing to spark interest in markets. And you want to vilify a person who is, seems to be very clearly doing nothing illegal because you just don't like it. Well, that's not right. When there's plenty of other corruption out there that you could go after. Anyway, that's my 2 cents on it, and let's move on to any other questions that you guys might have. I'm not seeing anything in the VTF, so I will pop over to the YouTube. Do you think that from Gabriel on YouTube, do you think that the IWM and up can be tried tomorrow? Oh, the inside and up for the IWM. I see you have more to your question, but I'll just start with that. So I think that inside candles as a trading technique are meant to be an execution strategy for when you like other things, namely trend and momentum. And in the IWM here, there is neither trend nor momentum. So this is just an inside day that's within a consolidation. And if you break above the high of the inside day tomorrow, you're still within the consolidation. If you break the low of the inside day tomorrow, you're still within the consolidation. I would not overread the inside day in the IWM today. It doesn't mean it's not entirely notable. I'm just saying don't overread it. If the if the IWM breaks up tomorrow and there's relative strength and the SPYs and the Qs are continuing and there's broad relative strength, then sure, you could try it. And if the IWM breaks down, you could potentially see it as a catalyst to break the 202 support. So I'm not going to say that there's no importance there, but I don't want to make it overly important when it's just an inside day within a consolidation. Reading the rest of your question. Big summer IWM calls were seen earlier this year. Okay, I don't remember that. It's good to know. Feels like it's going to get bid up soon, question mark. Yeah, I don't know. I'm rooting for it. I'm rooting for the IWM. I was frustrated earlier in the week when it didn't break through that 208 and give continuation when we were getting interest rate relief. I've spent a lot of time talking about that. But I genuinely don't know. I need it to prove itself, and the way that it proves itself is by getting above 207.50, and maybe the inside and up is the start of it being able to do that. So pay attention to it, but like I said, I wouldn't overread an inside day within a consolidation. Also have a look at Tesla. Big bullish 190 strikes for next week. I'd love a consolidation before breaking 180. Okay, that's good to know. I didn't see those go off today, but they definitely could have. I've been talking almost every morning meeting about 180 on the upside and 173 on the downside. I think that Tesla is a long above 180, even though we did get a couple false starts here in the last week or so. I think it's a short between below 173. I also did a quick lesson with with Tesla this morning on its breakdown yesterday, because yesterday some people on the team were looking for that breakdown, that short through 173. What I keep saying about the short is I like it if it breaks down, especially because I still think that Tesla's an overvalued company. And if you get a technical breakdown, it just confirms that thesis. But the market's strong. And I don't really love shorting relatively weak stocks in strong markets. You can do it, but I prefer to be long relative strength in strong markets than short relative weakness in strong markets. It just is a better probability of success. And even though I think that Tesla's overvalued, from a technical perspective, if this thing can get above and hold above 180, I do think that you're looking at a move into the 190 to 205 area, which is a very broad range. But I like Tesla. I like Tesla long if it actually breaks and holds above 180. Question on the VTF from Rich: if we buy an inside and up, then what should be the proper stop loss? It depends on the time frame of the inside and up. So technically, the right stop loss is the other side of the inside bar. Obviously, inside bars can happen on multiple time frames. If you're looking at the IWM one, that would just be, if you're buying the break higher tomorrow, it would be today's low. I don't actually like to use it as a stop loss when we're talking about daily inside candles. If you're talking about like a 5-minute or 15-minute inside candle, then the risk reward makes a lot more sense to use the inside bar, the other side of the inside bar, basically as the stop loss. I don't like using daily chart risk though. You know, a lot of my thought process on risk reward is to be involved in daily patterns, but to have smaller time frame risk. So what I would prefer to do if I wanted to buy this IWM inside and up, which I just already kind of explained, I don't love it, but let's say I wanted to buy this IWM inside and up, I would want to be long above the break of the inside day high, obviously, but instead of giving all the risk all the way down to the inside low, I would prefer to find a smaller time frame stop loss, some sort of pivot low or something like that, to have intraday chart risk to look for daily chart reward. So thanks for the question, Rich N. Hope that helps. From Austin in the VTF, can you maybe explain how the TLT works? Do they pay the interest in dividends? Yeah, basically. And do the dividends change as the interest rates change, or do you get locked in at the time that you buy? So it's a great question. So, and I'm honestly not like 100% perfectly sure on the answer. I'll answer it as best as I can. So all the TLT is it's an ETF of bonds. Basically, it's an ETF that represents bonds. So it pays a yield in the same way that buying a bond pays a yield. And you know, bonds can also move higher or lower, you know, based on the market. Like the price of the bond can move above or below kind of par, based on price changes, like any other asset can. But if you were to hold the bond all the way through maturity, then you get the interest rate that you bought it for. TLT is more or less going to be the same thing, except that when you buy the TLT, I guess you're not getting like a specific maturity date because you don't have the bond in hand. So you get paid interest, but I'm pretty sure that just comes in as the form of like a dividend on the ETF. But it's just the yield that the TLT ETF is taking in for the bonds that it holds, basically. So it just becomes the same thing. And yeah, and you just get paid that. But in the same way that the bond will fluctuate in price, the TLT will fluctuate in price as well. But if you hold the bond long enough, if you hold the TLT long enough, in the same way that you hold the bond long enough, then your expected return is basically the dividend yield itself. You know, which is to say that there's not risk. There obviously is because the price changes, but you will continue to receive that yield over time. So that's kind of the direct answer to your question. Where I'm a little bit uncertain is, you know, where you're saying about getting locked in to the ETF on the yield at the time in which you buy. I would assume that that's not the case, but I'm honestly not 100% sure how that works. So maybe you can do a little research and let us know tomorrow. Thanks for the question, Austin. Popping back over to the YouTube, from Kevin G. How do you deal with these consolidation days? They're always my toughest days. I liked the slight beat in the jobless claims, and I liked the short, but the tape kept giving fake outs for longs. Sure. So yeah, this was another one here with the beat on the jobless claims, or the higher jobless claims than expected. I would have expected that to be good for the market, but the market didn't do anything with it. It's not the most important number in the world, but again, it should be bullish. And I started to propose a little bit in the morning meeting today, just based off of the market's reaction to economic data throughout this week, that maybe the market, maybe, I'm not convinced of this even as I say it out loud, that maybe the message of the market is starting to change a little bit, where bad economic data is not necessarily viewed as good unless it's coupled with lower inflation data. If it's coupled with lower inflation data, I think that the market is willing to deal with the worse economic picture, as long as that inflation is coming in as well. but I think that maybe the market's signaling a little bit this week. And again, I'm still not 100% convinced of it, but maybe the market is signaling a little bit this week that, you know, sure, the weaker economic picture we can think is a good thing, provided that lower inflation is coming with it. But it's actually going to be very much a bad thing if we're getting a weakening economy and we don't see the lower inflation that's coming with it. But I just feel like a lot of the data that we're seeing, like even if you look at like, it's a little bit more anecdotal, but from some of these companies like Walmart and Target and some of the fast food companies, I feel like we're seeing disinflation coming from the data of those companies. I mean, the latest information that kind of came from Walmart said that the reason why the stock was better on this last earnings report was because the margins were better and they're doing a better job with the business, and that it wasn't a boost that was based off of inflation, which has happened to some of these companies in the past. We saw similar information from Target, and then you're also starting to see with some of these fast food companies, and I don't go to a ton of them, so I don't even really remember which is which, but we're starting to see like a lot more of a focus on like these value meals and stuff from, you know, your McDonald's and your Burger Kings and your Wendy's, which I feel like we haven't seen in a while, where they're trying to lure more customers to go to their fast food shop by having that, you know, I don't know. I still remember when I first got my first car and first got my license, you know, when I was 17, going to Wendy's and being able to get like the nuggets for $1 and the Frosty for $1. I would just go with some friends. I'd spend $3. I'd have, you know, 2 things of nuggets and a Frosty, and I'd be pretty happy. And then I'd go to the gas station where I knew a guy and buy some beer. That's how I would line my stomach first. Yeah, so I don't know. The market, like I said, from the perspective of interest rates, I've been talking about it all week, from the perspective of the move in interest rates this week and the data, I'm surprised that we haven't seen a stronger move in the market to some degree, but with more breadth. Like, not just NVIDIA causing the Qs to go up, you know, more of a broad-based move. And I did see a chart just the other day that showed, it was like a breadth chart versus history, and it kind of showed that we're actually at like a bullish divergence point right now of breadth being so poor in relation to what the S&P has done, that you tend to get like actually the biggest up moves in the market when breadth is really, really good and when breadth is really, really bad. When it's really, really good, you've got a beautiful classic bull market of everything moving together and just rotating from one thing to the next, and, you know, one sector rests and the next sector goes, and that sector rests and then the next sector goes, of just kind of constant bullish rotation. That's a very bullish market and leads to good performance. And the other time in which that happens is when the breadth compared to the S&P is so bad, which is where we are now, actually, that then you actually at a certain point get a big catch-up trade from all the underperforming stocks. Past performance, what do they always say? Past performance is no guarantee of the future performance or whatever, but we're actually in that situation right now where based on history, the breadth is so poor that it's actually like a contrarian bullish signal right now. So we'll see if that plays out. Thanks for the question, Kevin. I see some questions came into the VTF, but I'm going to stick with the YouTube for a second just so I don't lose my spot. Back to Gabriel. On the IWM, I would need to see the expiry date, though, to know when to enter along with those technicals. Okay, let us know. From Kevin G, the NVIDIA stock split is tonight, tomorrow AM. I actually don't know. I thought it was for Friday after the close for Monday, but maybe somebody can confirm to me on the NVIDIA split. I haven't cared, to be honest. I feel like a lot of people are really caring about the NVIDIA split, and I think maybe I'm the one missing the mark, but I haven't cared. A lot of people have been saying that NVIDIA is like a sell the event situation when the split actually occurs, and I haven't been convinced of that. I don't think that it's actually going to change the technical picture, but I could very easily be wrong. So that's exactly what. So that's why I don't know exactly on the split. But maybe if someone in the VTF can confirm for me. I thought that it was Friday night for Monday, but I could be wrong. From Josh, investors who hold NVIDIA stock at the end of the trading day on Thursday are set to receive 9 additional shares of the stock after the end of trading of the day on Friday. If you hold it on Thursday, you get it at the end of the day on Friday. Trading on the split will begin on Monday. The value of the shares will be adjusted to reflect the split. Okay. So yeah, so Monday morning is when it'll start trading at the split adjusted price. Rome Lee came into the YouTube a little bit late, but one of the reasons why he joined the live stream today is because he wants to know if Josh held his NVIDIA short. Josh did hold his NVIDIA short. He communicated it in the VTF today. I think it was a little tough for him. I think he might have been a little bit stressed out, but he had a really good hold. Managed to hold through that pop. I think he even added up there. Again, I don't want to overspeak for him, but he was communicating in the VTF is what I remember seeing. And then he pretty much covered the position at lows. And then I think I remember him saying into this pop and these moving averages that he reshorted like very, very small. And then I stopped paying attention. I don't know what happened next. But sounded like Josh did a pretty good job with it. You were stressed for him. Yeah, I was stressed for him too, to be honest. I was very nervous. Josh is saying that he changed his underwear 3 times this morning. Josh, let's keep it PG, all right? From Uvixi Bull to on to the IWM bullishness. I think that the first U.S. rate cut will start a reversal in the Q's IWM ratio that I have been tracking. I have done some footwork on the macro side that would suggest that this will happen, but I could be wrong about the timing, even though that's my big picture case. So, Pat mentioned this earlier. Historically, there has been an impulse in the market to sell the first rate cut, which is accurate, and that the market pulls back on that, which might be a little bit contrary to what you might logically think. But maybe that's happening because people think that this first rate cut is happening. Most of the time, a first rate cut is happening specifically because the market's like plummeted into recession, or the economy has, and then the Fed's coming in and cutting rates. So let's keep in mind that, you know, like we were saying, I think a week ago, history doesn't repeat, but it often rhymes, and every situation, therefore, is a little bit unique. And to me, I think that this first rate cut is unique because, yeah, you know, we're starting to see some hints at a little bit of an economic slowdown, but it's an economic slowdown from an absolute boom. The economy has been absolutely and utterly booming. I mean, you know, just look at the GDP numbers as they've come across. So I don't think that this first rate cut is happening as we're like have already plummeted into a recession. It's coming as the economy slows down a little bit from what has just been an absolute massive boom. So it's a bit of a unique situation. And I like your thought process, though, because your thought process isn't that the market sells off horribly on a first cut. Your thought process is that it creates rotation. And to me, that makes a lot of logical sense, especially if you have data that backs that up. That's fantastic. But that circles back to the conundrum of just this week of all the interest rate relief that we got this week with no big move higher in like long duration stocks. So we'll see, but you know, I love trying to pick apart all the pieces of the puzzle. Gabriel seems to agree. Apex Joy asking me for my opinion on Nike. We can take a quick look. I like Nike. I'm wearing Nike sneakers right now. Um, 95, and I pretty much only wear Nike sneakers. $95 is a nice breakout. Looks like it started to go today. There's a little bit of continued resistance up to 96, and there's just a gap above that. I like a bullish consolidation within the confines of a bigger picture consolidation. I like Nike. I like the technicals there, and the market supporting it also. KMX just looks sloppy. It's within a big range here. I don't got anything for you on KMX. It's just range bound. UVixie Bull. I just don't know how much of the Russell 2000 gets their financing done through overseas rates instead of the U.S. I would assume that most of the Russell 2000 does their financing in the U.S. I don't think that you have a much lower percentage, I would assume, of internationally present companies in the Russell 2000 compared to the S&P 500, compared to bigger cap companies. Back over to the VTF. Vikas mentioning that OLLI and TJX have also been outperforming. Yeah, big move back lower in OLLI today, but that thing's been doing great. And TJX has been crushing it since that earnings report. From Jim, you mentioned not shorting relative weakness in a strong market. I did exactly this the last couple of days and tilted pretty bad trying to trade my way out of the hole. Range break shorts are one of my playbook moves, but I tend to get caught when the VIX compresses and the market starts to trend. It's pretty frustrated giving back a couple of weeks gains in a couple of days. Been there. When you have been on tilt during your career, do you have a routine to get out before you do damage? Yeah, so kind of just a series of great questions and comments here, so thanks for that, Jim. So the market itself. So I like to talk about the market in terms of layers of probability, and I have a whole probability class that people can check out if they haven't already. The name of the game, the math equation that creates successful trading is very simply risk, reward, and probability of success, right? If you can risk one to make one and be right 55% of the time, you're going to be a very wealthy person. But yet most people I know who are successful in this business are actually wrong more often than they're right, but the risk reward makes up for it. So they have a losing percentage on their win rate. But, you know, if you can be right on your ideas 40% of the time and make, you know, 4x your reward when you are right, then you're also going to be very wealthy. Risk reward is relatively simple. It's relatively simple math. You know, I'm buying the stock here, I'm risking 10 cents and I'm trying to make 50 cents. Probability is much more dynamic because there are so many factors that will affect how a stock or market moves in any given moment. And I try to break those down in that probability class to like 7 or 8 layers of probability that I think are pretty ubiquitous that you can find in almost any trade that you're actually putting on. And I don't necessarily rank them as one is more important than the other, but without a doubt, the market itself is one of the most important ones. Very simply put, if the market's going higher and you're trying to short a stock, you're going to have a lower probability of success than if the market was going lower and you were trying to short that stock. Now, there are other layers of probability. Relative strength and relative weakness is one of those layers of probability. So if you are trying to short a stock and the market is strong and the stock is relatively strong, well, that sounded like a pretty bad trade to me. If you are trying to short a stock and the market is strong but the stock is relatively weak, well, you've got these two layers of probability that kind of balance each other out a little bit. You've got the market being strong, that's against you. You've got the relative weakness that's on your side, that's for you. Well, if in that case, why not just try to line up as best as you can your layers of probability? The market is strong, so instead of shorting relatively weak stocks where they balance, those layers of probability balance each other out a little bit, why not try to be long relatively strong stocks in a strong market so that you then have multiple layers of probability on your side instead of one on your side and one against you. So that just, you know, helps you to line the layers of probability up with your trading. there are things that can help negate the market's importance as a layer of probability, such as news, an earnings report. If there's a strong market and the stock had a really bad earnings report, well, guess what? The strong market actually still creates buying. If the stock is in the S&P, as just an example, and the S&P is ripping higher, and someone pressed their buy button and they bought the SPY, they just bought a fraction of that weak stock that's on the earnings report. It actually still, to some degree, helps to insulate it. But when you've got news and therefore the volume is also super high, it kind of becomes like a drop of water in the ocean. Maybe not that extreme. It still has an effect, but the news factor and the increased volume factor can really outweigh the market strength in that situation. But if you're looking at a stock that's relatively weak but it doesn't have any news, it doesn't have higher volume than it normally does, and the market itself is strong, then you're just really fighting that market, and it just becomes a much more difficult trade. That'd be the first thing I would say. On to the next part about kind of being on tilt and how to handle it. Sure, I'm human. It happens. I get frustrated. I was very frustrated at the beginning of this week. I was very frustrated into the close on Monday. It is definitely part of it. I try very hard to recognize in the moment the emotions that I have and not to trade those emotions, because that's how you damage yourself further. That's very difficult because you are feeling those emotions and you can almost kind of be blinded by them. So sometimes for me, those emotions will persist throughout that trading day, and they're very hard to battle. And that's why, so I always go back to that the number one counter to bad trading psychology, which is what this inherently is good game planning and the discipline to be able to follow that game plan. So sure, you have a bad trading day, you go on tilt, being on tilt maybe even leads to you making some other bad trading decisions, but you still need to have the discipline to say, all right, I'm at my max loss for the day, therefore I am stopping, and have that discipline. And you need to train yourself where the second you see that like maximum loss number on your screen, to say, all right, there are no more new trades that are happening for the remainder of this day. And honestly, that's a great time to go for a walk, because you're not allowed to trade anymore anyway, and you're furious, and that's just going to lead to bad decisions anyway. So step away from the computer and go for a walk. That's a great thing to do. One thing that I think that I am very good at is not staying on tilt through that next trading day. Very hard to counter during that day. I really think so, and again, that's just why game planning is so important, so that you can stop yourself when things are not going well. But I think it's so important in this business to start every day even keeled. You can hurt yourself on both sides. You can hurt yourself by still being on tilt from the day before and thinking that you can make it back and all that stuff. That's really bad. You can hurt yourself. I remember, back when we used to have more of a focus on in-office trading pre-COVID for our traders, and everybody came into an office every day, that when you saw a trader on a bad run, there would be times when I would see a trader walk into the office and I could just tell this person is defeated and hasn't even placed a single trade yet. This person's defeated and the market hasn't even opened yet. And that person is already set up for failure before they've even sat down and turned their computer on. You could just almost see it in the person's face from maybe doing what you're describing, giving back a couple of weeks worth of gains in a couple of days. And I also know from firsthand experience, you can do the opposite. I've had periods of time where I've been on such a hot streak where I'm making so much money that all of a sudden I just think I'm God's gift at trading. I'm Midas. Everything I touch turns to gold. And you just get too loose and you risk too much and you just take, C-level trades as if they're A trades because you think everything that you're doing is working. And then you end up, giving back more P&L by taking these crappy trades with too much risk than you would have otherwise, just because you were, too pompous based on your recent success. It's very, very important to come in even keeled each day and approach each day as a new day and recognize that in fact each day is a new day with new opportunities. And one of my favorite things to say is that the market is an opportunity creating mechanism. Yesterday's trades, they don't matter to anybody but you. Today's opportunity has nothing to do with how badly you butchered yesterday's trading or anything else. None of that actually matters. All that matters is approaching the day properly. So for myself, I have developed a mantra that I really get into my head and I really start repeating myself for when I'm in those periods of time that are bad. Because I'm on tilt, because I gave back too much money, because I've been in a losing streak or whatever. And I tell myself the next day when I'm, turning on my computer or whatever, I tell myself, all I need to do today in order to be successful is to just do the right things consistently over time. And I know what those right things are. All I need to do today to make money, maybe I won't make money today, but all I need to do to make money in the long run, which is all that matters, is to do the right things consistently over time. You can't trade your P&L, you can't trade your account, you can't trade to make it back. I do it myself. My account value right now is a little bit off of the high that it was at of the year. And I know that the worst thing I can do is say to myself, that number's where I need to be, and I need to be there tomorrow. It's not the right thought process. I can't force the market to give me opportunities that's going to make me the money that's going to get me to my highest point in my account. I can't do that. All I can do is do the right things today based on what the market presents to me, and trade it. And going back to, I think someone else, maybe I even missed it in the YouTube or the VTF, was talking about the difficulty of these consolidation days. When there's like that needs to be part of it. Part of what we're doing, and I'm kind of done, I guess, with the answer to your question, Jim, but segueing over to, I think I read a question out loud, and maybe I didn't even answer it right, about being frustrated in these range days. Part of what we're seeking to do as a team in the morning meeting every day is to say, what is the probability of this type of trading day being a range day, a consolidation day, a trend day, a momentum day, and then positioning ourselves as such. And what did we say this morning? Like this morning we're like, hey, this doesn't look like a great setup of a trading session today. Let's be a little bit patient off the open and let's see if we get a signal. And show me in the S&P where the signal came. The cool thing about being an equity trader compared to being a futures trader, in my opinion, is if you're a futures trader, you trade the S&P and the NASDAQ and the Russell and maybe a few commodities, and on a day like today probably sucks. But for me as a stock trader, I didn't care that the S&P was crap because there was so much dispersion. Nvidia's going crazy, software companies are giving big bounces, GameStop's up 1,000%. That is all trading opportunity all over the place, even if the market itself is doing nothing. So there is still opportunity that's out there. You just got to kind of go after it, I guess. So, Jim, I hope that helps you, and I hope that helps. I feel like somebody asked me that question, and I just feel like maybe I missed it. I don't remember what happened in my thought process. So, scrolling down here in the VTF. Jokes at Josh's expense. I love it. If YouTubers want to get access to the Josh Leffler show and the VTF, what do they need to do to sign up? You can just reach out to me directly, doldensmith@t3trading.com, and I can push them in the right direction, or info@t3trading.com, and we can push them in the right direction. Thanks for the question, Rich, to make everybody aware. It's exactly what I did this week after coming off 2 weeks of pretty much no losing days. Yeah. I've certainly been there, Jim. I almost feel like it's part of the growth process as a trader, and it just sucks. But there's nothing wrong with making mistakes in your journey as a trader. There is something wrong with repeating mistakes. So you just want to learn from the experience of losing more than you should, of maybe putting on some trades that weren't perfect, and just make sure that you don't repeat the mistake again in the future. I think that's the most important part. From Cold Smoke, the almost unshakable belief in an uncertain outcome with an edge in your favor. Yep, I'm not sure what that's a quote from, but it's certainly a good one. From Ryan, do you think the low volume has any meaning on the SPY today? I saw this data just now, but haven't verified it personally. The S&P 500 SPY finished with its lowest volume in 18 years, excluding holiday shortened trading sessions. Didn't we just have another one very recently that was the lowest volume in 18 years? Like, that might have been back here on the 21st. So it's the second time in a row that this has happened in the last few weeks. I don't put a lot on it, especially on a consolidation day today. I don't think that it has any real technical or market direction meaning for us. You don't need to have volume for moves. It's just better when you have it. There was an interesting mention in Pat's note about the end of the month this month, because I guess it's the first time in a long time where we're going to have 2 midweek holidays 2 weeks in a row, which is Juneteenth and 4th of July, if I remember this correctly from Pat's note this morning. And there were some, thought processes, I guess, on what that's going to do to liquidity and to volume. So we'll see. But it was also notable in Pat's note this morning that, I forget the exact statistic, but what was it? July has been positive for 18 years in a row, and the first 2 weeks in July are the strongest 2 weeks of the year. So we'll see. Thanks, Ryan. Recognize whether today's a money maker or taker day, and trade accordingly. Thanks, Rich. Thanks for the recognition. Back over to the YouTube to see if I missed anything over there. From Apex Joy, the NVIDIA split date is confusing to me. So tomorrow it will be traded at 10% of today's value, since tomorrow's new share owner no longer received 9 extra shares. I think we can keep it simple. NVIDIA will trade at the split adjusted price on Monday. And I was a little bit confused on the settlement date stuff also with the Thursday at the close thing. I would think that if you're trading in on Friday, and it's a $1,200 stock, you're not just going to take like $1,000 loss when it opens up on Monday and it's split adjusted. I'm very confident about that. So just don't worry about it. Just trade the stock. When it splits, it'll be at the exact same value, and if you were swinging it from any price at the higher price, you will get 9 times your stock after the split. I don't know why they couldn't just do a 10 for 1 split instead of 9. Yep, thanks, Josh. From Kevin, I found that it helped in the beginning of my trading career to hide my P&L to avoid tilt, and after 3 losses be done for the day. Yeah, so some advice from Kevin in the YouTube, that for him it was helpful to hide his P&L, and that if he saw that he took 3 losses in the day, to just stop for the day. I can support that. I've seen traders experiment with that over the years. Personally, it's not something that I've ever done. I've never hid my P&L while I've traded. I like to see it. But if it benefits you to not see it, to not trade your P&L and just trade your process, then by all means go for it. All right, well, ladies and gentlemen, great day today overall, I think, for most of us. And if you didn't have a great day, it's fine. Just learn from it, make adjustments, journal about it, so you can come in and do all the right things tomorrow. Because once you've established an edge for yourself in trading, assuming that that edge continues to hold true, which is something we need to constantly assess. But if your edge holds true, all you need to do to make money in the business is to just do the right things consistently over time. So on that note, have a great night, everybody. I will see you all tomorrow. If you're in YouTube, give me the thumbs up and tell a friend.